Hi, this is the Financial Reboot investment team with the market update Friday, July 29th, 2016, just after the market close. So it's been a very exciting week this week. There's a lot going on. We had major earning releases. We had the US Fed meeting, the Bank of Japan meeting, and the US GDP was released this morning. So there's a lot to talk about. So let's get started. Let's start with earnings. With earnings, tech was the star. Google, Amazon, uh, Apple, all great earnings that really bolstered up the Nasdaq. The Nasdaq had a great week. Another thing we saw, our bank earnings are starting to strengthen. Uh, we also had a little oil rebound in oil, and that's starting to boost energy. A couple of the big oil companies, Exxon, Chevron, didn't have great earnings, but some of the smaller companies are starting to show some life. And we've pretty much positioned in some of the smaller companies, and so we're a little focused on that. So let's move over to the Fed meeting. The Fed meeting, there was no rate hike, but there was some different language. It gave us a little bit clearer of a roadmap. And also, too, it seems like all they're waiting for is that thorn in their side, inflation. Yeah, we believe a rate hike will happen before the end of the year. And we'll talk about the GDP number a little bit later in this discussion, but we think the GDP will improve. We think we'll get a little bit of inflation. Oil prices are starting to rise and things like that. The financials are already acting like they foresee a hike. So we want to stay on page with our plan, and we're moving forward as we described in our free ebook, getting into the financial and the energy sector. There's a lot of good stocks right now in those sectors that are at real reduced prices. So the Bank of Japan meeting, there's without going too deep into this, they didn't change rates, which kind of shocked people. A lot of people were expecting them to go a little deeper into the negative rates, but they are preparing another round of stimulus, mostly this massive buying in ETFs. It seemed like, for the most part, really the yen was the only thing affected by the BOJ meeting. There's a lot of volatility in the yen. If you're a forex trader, there's probably a lot of opportunity in there. This news has not pushed gold high enough. There's a lot of talk backed by the gold bugs. They seem to be getting very boisterous in the market all of a sudden the last 2 days. But gold had a good couple of days, but it still hasn't taken out that 1374, and it still doesn't look like it's going to make a move towards 1400. So as far as we're concerned, it's still a little bit of a wash, and we're watching it, but we are not playing it right now. Now, this is the big number, the US GDP. The US GDP came in at 12.2%, which is maybe about 1.5% below most of the estimates. It's very lethargic growth, but there's some very positive internal signs. There was a strong inventory reduction and signs of very strong consumption. You know, you have to think like a business person, or say a business owner, when you look at this information, because if inventory is sitting on your shelf, it's doing you no good. You've paid to have it created, or you've bought inventory to put fill your shelves, but it's not moving off the shelves. So you're not putting any of that money that you've invested in this inventory into your register or your pocket or your bank account. It's basically stagnant money. And aging inventory is very detrimental to a balance sheet. But we had the strong consumption come in. So inventory reductions with strong consumption, it tells us that we're starting to reduce that old inventory. The buying is strong. So down the line, we're going to have to replace that inventory. What happens is we have to produce items, manufacturing gets a kickstart, um, and these businesses' balance sheets, well, the U.S. government's balance sheet starts to firm up a bit. We think there's a third quarter